All right, we are live. How's everybody doing out there? Welcome. If this is the first time you are here watching us, my name is Dominic Danino, aka Mr. Rent-To-Own Home, and this is the Mr. Rent-To-Own Home Show. And today we are going to be talking about a very hot topic, right? And it's something that I like to say it's recession proof, because whether we have a great economy or a bad economy, um, it's going to happen, right?
Yep.
There's nothing that could prevent from it. That doesn't mean everyone, but so the topic for the day is how is rent-to-own homes can help people going through a divorce or recently divorced, right?
Yep.
So welcome. I am joined by James Brown today, real estate investor, agent, EXP in the Denver market. So welcome, James. How you doing, buddy?
I'm good. Let's go.
All right. Well, I'm going to turn it over to you because you're an authority in this business, right? You're an authority on this topic, right? And you have a book on it, right? You want to show off the book?
I've got it right here, prepared. Navigating
Cool.
Divorce and Real Estate.
Wow. See, we got an expert in the house, right? And that's a way for agents to niche down on being an expert in some particular aspect of real estate, how you help clients.
Yeah.
But right, so divorce.
Yeah.
So let's start diving into this, and I want to cover from beginning to end, right? So not why people get divorced, but but what happens in a divorce situation, right? So from your experience, from your book, what is the path? So after people have made a decision, say, hey, I'm leaving you, we're getting a divorce, now what?
Right.
What happens?
And I'll just say too, like, it takes a team oftentimes. So I'm a realtor. I can help with the real estate, but there's a lending side to it, figuring out the finances. That's a huge part of it. So just wanted to preface that it takes a team. So, go ahead.
No, yeah. So great point there. Right. So the team obviously is once you made that decision to go ahead and move on and get divorced, that team could be an attorney, that team could be a paralegal, if it's amicable or not amicable, right? And then maybe there's a judge involved too, right? In some of the decision making, and obviously you may have kids involved in this, right? Where people have to decide, okay, what are we going to do with the kids? But we're going to set all of that part aside. Not that it's not important, but that's not our area of expertise per se, right? Our area of expertise is, I say, what happens with the assets as people go through a divorce, right?
Yep.
What are the decisions that need to be made on that? So there are going to be some soft assets, some hard assets, right? So whatever that decision, if it's amicable, people are going to decide, hey, you get this, I get that. But generally, there's going to be some real estate. And when I say real estate, is their home, right?
Yep.
You got a couple, you got a family, and they're going through a divorce. They have a house, right? So I joke and saying, hey, so now what? How are they going to divvy this up? Are we going to cut the house in half?
Yeah.
No, right? So a decision has to be made with that property. Now, typically what ends up happening is one person stays and the other one leaves, right? Or maybe the house needs to be sold so they can split the equity in it. Or somebody stays, but the other person leaving wants their part of the equity, right? If it's tied up in the house. Now, maybe they have some cash assets where the individual stay and say, hey, okay, you get a greater chunk of the cash assets, so we don't have to sell it and take it out of there. You'll just get a bigger chunk of my retirement account, 401k, that may be, right?
Mm-hmm.
So, but if there isn't that option, then the person that's leaving is going to want, or the decision it's either going to be made through the attorneys or amicably or through the court, that the person staying, in order to give the leaving party their portion of the equity in the property, they either have to refinance or sell it or give them cash equivalent from some other asset that they may have. Right. So if they have the asset liquid from another, from another account to give to them, okay, great, not a problem.
That makes it
now
easy.
However, the leaving party may also be on the existing loan too, so that could be a portion of the decision being made, where the judge or the agreement between the two parties say, hey, you got to get me off that loan too, because eventually I want to go get my own loan. Right. And I don't want to be responsible if you make late payments. That's going to impact my credit too. So usually we see, hey, the judge or the decision, hey, you don't necessarily have to give me equity out of that property, but you got to get me off that loan. So you have to refinance, right? And so the person that's staying, maybe they qualify. Maybe they both, when they applied, the qualifications for that property was, hey, 2 incomes, right? No, you make 100, they make 100, and then you qualify for, I don't know, say $500,000, and now you have joint income. But now if one leaves, there's that income that departs from that marriage. And when that individual that stays go to get their own financing, they may not qualify, right?
Yeah.
Or another aspect of divorce is when people are going through that process, they're emotional, they're mad at each other, whatever happened that drove them to that point, right? Maybe there's a dispute on the debts, right? Like, no, that's your student loan. Oh, no, that's your credit card. Oh, no, that's your car payment. Oh, no. And there may be some bickering that's happening along the way because they're both mad at each other.
Right.
And that has an impact on their credit. Just having one late payment either on your mortgage or on your car loan, if it's very recent, it's going to have an impact on your credit score. And even if it's just one, it has an impact, let alone if both parties are mad at each other and neither one wants to pay the credit cards because they're blaming the other party, or they're mad because somebody did something that drove them to that divorce, cheating, whatever that may be, right? So it's a way to get back at somebody else. That ends up happening, right? It's an emotional aspect that people get into while they're going through this process, and they don't realize the impact that is going to have with them once all of that emotional has settled down. Basically, okay, now I'm back to reality. It's like, now what do I do? Where do I go live? Can I once I leave the house, can I qualify for an apartment? Can I get an apartment? What's my credit looking like? What's my income looking like? Am I gonna relocate out of state because I want to get away as far away from this individual that I'm mad at as possible? That's these are the emotional decisions that end up being made, and there are impacts to that. So anything else you want to touch upon from that aspect, as people are early on deciding what's going to happen, what are we going to do, and so forth? What have you seen?
Yeah, all of that. Definitely have seen where, one side runs up a credit card, just like, screw it, and just trashes the combined credit. They may, they may have good income, which is a good fit for rent-to-own. Sure. If they can afford the home, the one they currently own or the one they're moving to. But if their credit's trashed, the bank's going to say no. But as long as we see that it's fixable, we can help out.
Sure. So somebody's like, hey, I'm mad at him or her, and I need to make myself feel better. So I got a credit card that's free money. It's on her credit too, or his credit too. And I'm just going to make myself feel happy and either go shopping, go spending, go on a vacation, go do this, go do that, right? And they don't realize the impact that it's going to have for them as they're kind of basically the dust settles and they need to move on with their lives, right? So and then we talked about the splitting of the assets. Now that's a decision that needs to be made, but the biggest one that we talk about is the splitting of the assets as it relates to the home that they're living in, if they have a home, right? And then how are we gonna do that? And then can I qualify on my own if I have to refinance or I leave somewhere else? And then, right, if I've impacted my credit enough, Am I even going to be able to get a loan, two, an apartment, or whatever that may be, right? And so, who gets the house?
Right. I've got a good kind of scenario where it was an amicable divorce. The husband wanted to actually help out the wife, so he was paying some bills that made it harder because, he's paying them, and that's making his scenario look much better than hers. I can't remember, she might have been a homemaker. She needed to build credit and be able to go, step out on her own. But he, out of the generosity of his heart, was trying to help her by paying these bills, but it actually hurt her. And that's where, talking with your lender and your agent to figure out that, what's the best path financially. You gotta look at all things. So
yeah, it's funny you bring that up, because I had a colleague, another lender, called me up, and kind of they were running through a scenario of a client that they had, and as part of the divorce or a part of the settlement, the spouse had to pay alimony as part of the divorce, right? Well, the alimony has to be documented, right, on installments, to make sure not only is it court order, but just because it's court order doesn't mean they're receiving it. So to use that income to qualify for a loan, you have to document that they've received it for 6 months. Well, they didn't realize this. So the spouse that was responsible to pay the alimony, gave the other spouse just one lump sum all at once for a year's worth of alimony. So this lender, friend of mine, she was trying to get them approved, and it was turned down because that wasn't acceptable, because it didn't document a consistent receipt of that alimony.
Right.
Now, I gave her a few solutions or options to say, hey, you have to kind of get an explanation why they do that, or document that it truly was for that purpose. It came from the party that was giving them, from the banks, and document that it truly was for that purpose, and potentially explain it away, right? But but the way that it just showed up as a one lump sum instead of the continuous receipt of that to be able to be counted towards their qualifying in the new mortgage.
Yep.
So what they don't know, right? So that's why it's important to talk to experts as it relates to that aspect of it, right? Having a team of people that know what to do. So let's just say we've come to that conclusion, and people have decided to separate or divvy up the assets in a particular way, right? Now the leaving party has to make a decision. What are they going to do? Where are they going to live?
Yep.
Right. So if they haven't impacted their credit through the divorce, but let's say somebody was a homemaker and they hadn't worked for 10 years, right? Now they're having to go back to work. So there's that aspect. There's a gap of employment of 10 years or a period of time that they have to sort of reestablish, basically, right?
Yeah, we're working on one like that right now.
Well, there you go.
Yep.
Right. But potentially to be able to do that. So they're not going to qualify for traditional financing in that aspect. Right. Impacts to credit, new job, relocation, right? Hey, I'm getting away from this person. I'm going to go way across the country to go ahead and start my life again. Right. Well, where are they going to live? So are they going to rent an apartment, rent a house potentially, or if they want to buy a house, they may not qualify for that. Right.
Yep.
So
there might be a gap in income, a new job in a new place. Banks
absolutely
are very, we look at that too, but banks are like, you don't have a job lined up if it's not like an official job transfer with that
with
document.
Your former employer, right? Or you may be shifting what you find at the new location, and it may not be the same thing that you were doing before. Yeah. Or even if it is, hey, I don't know, I'm an agent in LA, and I had my established business, I'm getting divorced, now I'm relocating to Florida, right? Well, I was making, say, I don't know, $200,000 as an agent in LA, but am I going to be making the same with being a new agent in a totally different market? No. So agent or a lender is going to ask, like, well, you have no established relationship. Yeah, I understand you've been agent for a long time. But this is a new market to you. You don't have, the contacts, the relationship, the business profile to be able to generate that same amount of income.
Yep.
Right. So that could be an issue. Right.
Yeah.
So what would be some options for people? So you want to get into that. So let's say they're running into obstacles in getting housing. And it could be, yes, they're okay with renting for a while if they can get it, right? Based on credit and so forth and income.
Yeah.
Because
And they may have to.
apartment complexes still require rental, the verification of income, right? If you're going to rent a house, the property management is still going to require, hey, how much do you make? How long you been at your job? What is your credit score, right? So they still have to do some form of qualifying. It isn't like they just give you the keys just because you show up.
Yep.
So, or if somebody says, hey, I walked away with a certain amount of money from my divorce and I have kids and I want to have a home for my kids, like, what are my options? What's viable for me? If I can get financing, great. More than likely, they won't be able to. But what are other options, right? Besides an apartment. So you want to dive into that?
Yeah. If they've got that cash, that we can be flexible on the other things, the job history, the credit, those kinds of things. And another thing we run into, people go from a home, they've got big dogs, maybe they're pit bulls, things like that, where they're like, an apartment, they're not going to take us. What do we have? What are our options? And most people want to be into a home.
Yep.
We prefer those too. So
yeah, something with a yard for the dogs or the kids, if that's what's happening there. If you're a single person and leaving a divorce, then okay, you probably have a little bit more options in the way that, hey, I can just adjust and let me just get an apartment for a while until I decide what I'm going to do and kind of move on with my life. Right. But if you need a house with a little bit of room and a yard or so forth, your options may be limited because you don't qualify. So this is kind of where we come in these situations, and we can go over a couple of examples of people that have kind of encountered this, where they left the divorce, they received a portion of a settlement from that divorce to move on with their life and start anew somewhere else, right? Or out of the previous house. And so through our rent-to-own program, basically we give them an option to say, hey, if you have money for a down payment, we can basically get you into a home within reason, being, hey, what is your job expectation? Do you have a new job? Do you have a new job offer? Are you starting a new business? Did you just relocate your business? What does that look like now? And then what will this look like in the future? Right? Just because it is this way now doesn't mean it's going to be not different in the future. Right? So the goal here is to try to work towards something that's more stable and or be able to be documented by a lender to get financing in the end, right? So we can be a gap or a bridge to that through our rent-to-own homes program. Is, hey, let's get you the house now, work on this, establish yourself again at the new job or new business or new place. And then once your mortgage ready, then you could get your own financing and get the house.
Yeah.
Right. So it takes a little bit of planning, coaching, and some work, but this is a very viable option because, as we know, divorces are part of life. I call them life events. It's just the nature. It's going to happen, not to everybody, but but a high percentage of people get divorced. So a big chunk of the population. So I mean, it's just part of life, right? And so if you don't have the ability to go ahead and qualify for traditional financing because of that, then we can help you, whether it was new job, credit, relocation, changing employers, whatever that may be.
Yep.
Do you want to talk about the specific scenario that we've encountered? Right?
Yeah,
and I got a couple other ones too. The
more
recent
let's
one.
Talk about that because it's unique. It's a kind of a unique solutions. So I had a lender in South Carolina that's got a gal. We mentioned it before. She's hasn't worked in 10 years. She basically cashed out of a really expensive property, bought a more reasonable one, and has just been living off that income or that cash. Now she's kind of on the ropes, trying to pay off a truck, have some other things done around the house. And she's got equity locked up in the house because she paid cash for it.
Yeah.
But she can't go get a loan or refi because she hasn't had a job. She's working on it. She's just got one, and she's going through some training. So the bank won't give her that cash out. And so this is a really cool model, and it could be many scenarios why people want to get their cash out of their house but can't. So do you want to jump in and kind of add to that?
So this one is unique because they already are in the house, right? Typically we get somebody to say, hey, I need to get in a house, right? I have the money from this divorce settlement, but I can't qualify, so I need to get in a house. Can you help me with that? So we can help people with that to get them in the house. In this instance, this individual, we didn't run into them, or they didn't come to us trying to get the house because she basically had enough money to just go ahead and pay cash for it. And so there was no need for us. And no, the circumstances now are different than when she got into the house, right? So she's used up the savings that she got, or living off that settlement.
Yep.
And now she's barely establishing at a new job and so forth. Well, I mean, if you hadn't saved any of that money, one, yes, you may have a free and clear house, but that doesn't pay for bills or doesn't pay for food, right? You can't pay the property taxes or the homeowner's insurance from the value or equity of the house, right? It has to be in cash. They don't accept equity, right? So
Nope.
This is a unique situation. So basically, she's got a lot of money tied up into a house, but has no additional money to live on, or pay the property taxes, or pay for insurance, or pay off some of the new incurred debt that she took on. Right? She ran out of money. So so this is a unique situation where we're able to kind of help her get some money using the equity of the house to give her an opportunity to actually say, hey, let's get you some set aside money for at least maybe 2 to 3 years, and give you the opportunity to kind of get yourself reestablished back on your feet with a job and a history and whatever you're doing, so that way you're kind of back to the traditional world. And then at that point in time, okay, you can choose to sell the house, buy the house, refinance, whatever you want to do, right? But in the meantime, you need some options or something holdover money, right? So I know we do a creative method in doing that, where we're able to kind of give her some equity, right? So most people out there are thinking, well, why doesn't she just get a loan? Well, no lender is going to give her a loan because she just started a new job. No, she's less than 30 days, and in this instance, she has no credit, right? She's got no credit because she was she was a stay-at-home for 10 years and didn't need it, right?
Yeah.
And that's why she didn't have a job.
Yeah.
Right. So no traditional bank is going to give her a home equity loan or a cash out refinance. She doesn't qualify for any of that. Right.
Yep.
So we're helping and stepping in and basically saying, hey, we're going to give you some of that and using the house as collateral for that, but doing it as a plan with something that, hey, needs to work, but there's an action plan to get you to your finish line, right? But you got to do your part too, right? You got to quit running up the debt. You got to quit, make sure that you're paying the property taxes and the insurance and get off all this debt. And now with your with the new job established yourself, start saving money again, or start getting, basically being a grown up, right? Or being an adult, basically, right? I mean, kind of, okay, it's time to, kind of. Otherwise, you're going to be in trouble, and you may end up losing your house not because of how much value is in it, but because You're not paying the property taxes or the insurance. I mean, this instance, I mean, it's mind-boggling. Like, free and clear house with no homeowners insurance, and if it catches fire or a storm comes through, she's going to be in the world of hurt, right? So we're providing a solution to something different that no traditional lender can do. Thinking outside the box, right? We're kind of problem solvers when it comes to that, right?
Yeah.
Whether they're trying to get into a new house or, hey, I took all the cash, paid it cash, and at the time it sounded like a great idea and left myself some money, but then you end up spending it and gave yourself no cushion, anything to be able to do the other stuff because maybe you didn't realize, oh, I got to pay property taxes, I got to pay house, insurance, so in case the house burns down, right? Yeah. So there's a sense of responsibility that people kind of we have to coach them on and say, hey, look, we're giving you another opportunity, but you got to do your part and get on track, right? And otherwise, you're going to get yourself into deeper trouble.
Yeah. Yeah. So this is a beautiful thing. Like this example we just used, her divorce was 10 years ago. Now she's needing that equity out. But you might have a couple just starting the divorce proceedings. They don't have cash. Like one wants to move on, wants cash, but it's locked up in that property. So we can do the same thing, get them the cash out, let that other person move on, and they'd have, money for their down payment.
Money to split, right? So the first option is go to a traditional bank or lender, see if you qualify on your own. Right?
Yeah.
Then obviously you don't need us, right?
100%.
But if that's not a viable option, or you already tried that and there was no solution for it, then you can reach out to us and say, hey, tell us about your scenarios here. Here's how we can structure something so that way both parties get what they need to be able to move on. And also make it very clear here, you got to do this, and this, so that way in the future, you don't need us anymore, right?
Yep.
So I want to talk about another example, right? So somebody else that got money from a divorce settlement, and they were coming in from another state.
Mm-hmm.
But she had not worked, now she had a degree in marketing, but she hadn't worked in over 10 years also. Right, she was a stay-at-home mom, so it was like she got no recent job history, and also relocating from another state. So she had a big settlement. Now, could she have done what the other client did was say, "Hey, pay all cash for a house"? Now she didn't want it. This client didn't want to do that, right? And which is fine, right? So basically, what we said through our rent-to-own program is like, "Hey, okay, that's fine. No. Keep the majority of your cash. You're working with your financial planner. So the way that you want to do is break up this money that you got. It's like take a portion of it, put it as a down payment, get into the house, right? We'll do the rent to own for you. Now give yourself some time to establish yourself at the new job, right? And then and set aside at least 12 months of living expenses out of that. And then whatever's remaining from that, now go talk to the financial planner on how you want to invest that money. You're kind of start rebuilding your piggy bank, basically, right? Your retirement account, and have as a backup plan there, right? Where you're not having to use all the money for the down payment, right? You're just going to take a portion of that. So she put 30% down, and then we said 12 months aside. And then while she was working, hey, I'm getting this new job here, and I'm gonna get back into the workforce and so forth, right? So, and then once she's reestablished herself, she's gonna have plenty of equity, so she can basically get her own financing, in her own name.
Yeah.
Right. And have a nice cushion of money too that's left over from that settlement.
Yeah.
Yeah, I mean, it's gonna. I mean, like I said, like we said initially, it's just what's happening these days, and it's a typical thing. It's not an outlier anymore. It's the norm, right? But people don't know what to do, or how do I solve or what do I do about my housing, or how can I get myself back on track now that we've decided to move on with our lives?
No.
So that's where our expertise comes in, our experience and looking at things and saying, okay, how do we solve for this problem, get you what you want, right? Help you get back reestablished. And then, then after a while, then you're kind of on your own. You get your own financing and, hey, you don't need us anymore. Now you just keep on going and live your life.
Yep.
Right. So having resources to bounce scenarios off are important. And no, so come directly or refer to us from other people in the industry, agents or lenders, right? And if you're an agent or lender out there, and if you run into a scenario like this where you're not quite sure what would be the best way to solve it, right? And you're thinking traditional, maybe traditional isn't your only option, right? But you could still potentially get paid as an agent or a lender, whether an agent now or a lender down the road, helping people, right? Because your job isn't just about your money or what. Oh yeah, what do I get out of it? It's like, okay, well, I have a client, I want to try to help them, and maybe what I have isn't the best solution for them right now, but there's value in me helping them now, and then solve their issue, and then that could potentially lead to referrals. It's just good energy, good vibe to try to help people, and I truly believe in, like, hey, if you can help people, it comes back tenfold.
Yep. It feels good.
Yeah, I mean, any other scenarios, any other ones? I think you may have run into a couple other ones too.
Yeah. Let's see. We did have one, we were talking about relocation. That's a challenge because of, jobs not being established. But, we did help somebody move from one city to another. They didn't have jobs lined up. Bank's not going to help them out. Their debt and credit was just a mess. But we saw that there was light at the end of the tunnel, and where they were moving, the husband had skills in the trades, very transferable skills. The wife could do some stuff online. So we felt pretty comfortable with that. Plus they had put down a pretty large amount of money that gave them some cushion to, pay their mortgage or rent in this case for a while. So they kind of had a little bit of a runway. They weren't going through a divorce like we're talking about today, but they were under a lot of stress, and it was almost going to create a divorce. But they hung in there. They got the house. They're happy. Everything's settled out. But anyway, that was another.
Yeah, I mean, here's the thing, right? So we talk about divorce, and the scenarios, basically the topic is about divorce, right? But when you start having financial stress, right? People start having financial stress. That's what ends up leading to some of that, right?
Yeah.
It leads to people
it's thinking about
divorce or fighting or whatever, right? Yeah, financial stress, right? So, and a big aspect of it is housing and credit and debt.
Yep.
Right. Now, if you can get financing for a home equity loan to consolidate or a cash out to consolidate, then yeah, by all means, right? And kind of learn from that, so that way you don't do it again, right? I was having a discussion with somebody else about this, or I think we might have brought it up, right? So there's about $3 trillion of equity out there these days, right? Oh, my brother was doing a post about the market in Phoenix year over year, even after a 27-year low in transactions, year over year here, the prices rose 6.4%. So it's not getting cheaper. It's going to continue grinding up, and slowly, not as fast as it was 2021, but it's going to continue. Houses aren't getting cheaper. There's still a shortage of houses. So if you've been waiting for the crash, it isn't coming. Not here anyways. I know there's a few pockets in Florida that are probably having, but that's caused by something else. That's caused by insurance and property taxes and some of the issues that they're having down there because of the weather and so forth. right? But that's not happening here. I don't think it's happening in your market either, right? So the majority of the markets out there aren't running through that. So values are still continuing to go up, and people are waiting. It's going to get more expensive next year, and the year after that, and the year after that, and the year after that, right? But we have a solution to get you into a house now, lock in that price, get you on that path to home ownership, especially while things aren't crazy. Because if rates drop to 5 or 4 or 3, it's going to be madness.
Yeah.
And most of you that are going to be first-time home buyers or even second-time home buyers, you're going to lose out on the bidding wars, because you may not have money to overbid on houses, right? And then when the money is cheap, investors will jump in, and they have deeper pockets than you do. Yep. So it's going to be even more competitive. So yeah, get it now, because if rates drop, it's going to be even more competitive. Any closing thoughts?
Yeah, if anybody wants a digital copy of this book, reach out to me or Dom. We can get it to you. And got questions, just direct questions, reach out. We're happy.
Ask us about your divorce scenarios. We'd be happy to kind of maybe come up with a solution or guide you, or
sooner
or
than
any
later.
other scenario that any other client that you may think, you agents out there or lenders, hey, I may have a client that doesn't qualify for traditional financing. They need help. Can you help them with the rent-to-own program? Yep.
Yeah.
All right. So how can people get a hold of you if they want to get a hold of that book? Do you want to give them your contact info?
Yeah, on screen there, Linktree/partner with James Brown. I've got a bunch of different links, so reach out that way. Or go to realhomesolutions.org. That's our company based here in Colorado.
Awesome. All right. Well, if you want to get a hold of me, you can go to MisterRentToOwnHomes.us.com. That is our website. And I am on YouTube, Instagram, TikTok, and Twitter as Mr. Rent to Own Homes. So you can DM me, message me, and also in the description of the video, you can go to my bio. My email is there, my phone number is there, and then just follow me on social media and reach out if you run a scenario. And then maybe I'll see some of you out there, one of our presentations, rent to own home presentations that we do at a couple of the title companies and real estate offices. So until next time, thank you all for joining us today. Bye-bye.